Good morning, good afternoon, and good evening to one more episode of coaching from Babu Muralidhar and Company. In today's episode, we will discuss various terminologies that is being used in an accounting environment. Anyone who aspiring to become an accountant should know the basic terminologies that are being used in in accounting. What is a transaction? Let's type it out here for us to understand. What is a transaction? An activity which involves money or money's worth is a transaction. Then comes, what is a cash transaction? Transaction which involves immediate cash receipt or cash payment is cash transaction. What is credit transaction? A transaction where cash is not received or paid immediately, but will be paid or received later is a credit transaction. Then, what is a capital? A capital or share capital, as it is called, it is the amount invested by the owner or a proprietor of the organization. Next terminology what we should understand or what we should know is drawings. See, these are all some of the basic things that we will come across when we go through the future chapters. What is a drawing? Drawing is nothing but the cash or goods or assets withdrawn by the owner for his or her own consumption. That's called drawings. Then, what is a voucher? This is one of the basic requirement to understand what is a voucher. It is a printed document to support a business transaction. For example, sales invoice, purchase invoice, pay-in slip, bank pay-in slip, cash memos, etc. So these are all some of the examples of vouchers. Then, what is an invoice then? Invoice is a statement, basically a statement prepared by the seller of goods to be sent to a buyer. It's any statement of goods prepared by the it's a statement prepared by the seller of goods to be sent to the buyer. The then the question comes in: any statement that's prepared by the seller, is it constitutes an invoice? No. An invoice should also contain quantity, rate, value, discounts, and also net amount to be paid by the buyer to the seller. Let's talk about the next one, purchases. What is a purchase? Buying of goods for the or buying of goods with the intention to sell is called purchase. Then purchase returns, or you will also come across in your books goods outward. Purchase return is basically return of goods purchased. Return of goods purchased can be because of, can be due to quality or rate or any other discrepancy for which buyer is returning the goods back. Then the next item what we will be seeing is what is sales. What is sales? When there is a purchase, obviously we have to discuss about sales. When goods meant for resale is sold, it is called sales. Then sales return or or return inwards. When goods sold is returned by the buyer, again for the rate or quantity or quality discrepancy, it's called sales return or return inwards. Then stock. Unsold goods lying on a particular day is known as stock. Then what is income? Amount receivable by way of sale of goods or commission earned or dividend earned. It's called income. What is expense? Amount incurred towards production or sale of goods and services. It's called expense. Then the most important thing is what is an asset? We have seen in one of our episode earlier, asset is something which is used for generation of income in future. Okay. A physical thing or right owned that has monetary value is called asset. What is a liability? It's a financial obligation of a business. Then who is a debtor? Who is a debtor? Debtor is a person who receives money or money's worth without giving money immediately. but liable to pay in the future. Then comes who is a creditor. Creditor is a person who gives money, gives a benefit, let's say, gives a benefit without money or money's worth immediately, but liable, or rather, but eligible to receive in future. So far, that's good. Let's think about the next definition. What is a depreciation? Depreciation is nothing but a gradual reduction in the value of an asset due to usage or time. Then what is bad debt? Bad debt is hmm, it's a loss arising out of a failure of a debtor to make payment on due date. So so far, I hope that these definitions have been clearly understood. Please let me know any queries or clarifications on these definitions so that I can get this clarified in the next episode. Thank you.